Hello, I'm Finola Burke from RaaS Research Group, and today we're focusing on Energy, Transportation and Infrastructure Technology Group, Provaris Energy, ASX ticker PV1. Joining me to discuss the company's strategy is Managing Director and CEO Martin Carolan, and my colleague and covering analyst Andrew Williams. Welcome to you both.
Thank you.
Thanks, Finola.
So, Martin, if I may start, it's a big question. What is the opportunity in the European Union energy transition, and why did Provaris choose to start with this first?
Yeah, thanks, Finola. I mean, I guess it's a good opening question. If you look at the context of Australia, it's where we started early, but we now focus predominantly in Europe. Australia is reliant upon starting up what is gigawatt scale export projects, so it doesn't have its own market. So what do you need to have in place? It's significant offtake and projects that require significant scale, which comes with large capital development costs and then large capex. It also suffers from the tyranny of distance. So that is the scale equation. If you look at the regional market in Europe, it's actually the opposite. And while they will still import volumes of green fuels from further afield, there's actually all the success factors are in place in the regional context. So the regional market is highly suitable to compression from a hydrogen perspective, and we've established that we can be the lowest cost delivery solution there. There's clear import demand, which has been in place for some time. It offers the lowest cost supply in a regional supply context at sub-gigawatt scale. There's a mature regulatory framework from both incentives to create supply and offtake, and then you've got the regulatory applications of carbon. Those financial incentives are now established in terms of $1 billion incentives regarding, is it the Innovation Fund, is it H2 Global, the European Hydrogen Bank? And then there are incentives that are being put in place for industries to transition to lower emission profiles. So the taxonomy that they talk about is well established. And then most importantly, we provide a solution that matches that regional scale up that's looking to be deployed. So the barriers to entry there are far less to us, and we are highly strategically aligned in that market.
Good morning, Martin. Excuse me. I guess one of the things that attracted in terms of the European Union was also the availability of and acceptance of green energy, so green hydrogen. And I think that offers the investment case and the business model a pretty strong advantage. Is there anything, a little bit of colour you might be able to provide around that as well?
Yeah, I mean, we have a base in Norway. Let's just use the Nordics as a case of supply. So you've got a regional grid network there that's already 98% green. It's provided by hydro supply. So you've got an abundance of stable baseload green supply, which you can connect to the grid. So already we've removed the requirement to build out significant scale of RE supply. So that's lowering the cost of production. Then you've got the short shipping distance. It's 2 to 3 days sail from Norway to Germany versus Australia. That's some 30 days. So our compression solution then becomes highly viable and lower cost. And then you've got the German market, which is opening up in terms of their network of core transmission supply. You've got ports starting to be established, and you've got industries now looking to establish offtake. So within that regional context, you can produce and deliver hydrogen on a delivered basis lower than what a production cost would be from other parts of the world, and importantly, that would be the example of Australia.
I think one of the important things, or one of the things that really sort of jumps out in terms of the aspects of the Provaris story, is the key relationships you've managed to forge with major or global players that may not be very well known in an Australian investment context, like Yinson and Carolan. How do these relationships play out in terms of you getting, from concept or through proof of concept into production and cash flow? And are there leverage opportunities there with those partners into maybe other partners and business opportunities, particularly in an Asian context.
Yeah. Yeah, that's right, Andy. I mean, all development companies are looking for credibility. So with Carolan as an example, this is a major breakthrough for us. We've been talking about being a developer of a shipping solution for the last few years with no operational track record nor balance sheet. So, and in March, we made it very clear to the market and our investors that we wanted to implement this capital light model. So we needed to bring on an owner-operator of vessels. So in Carolan is the example. So they're a top 20 operator. They have some 400 vessels in their fleet, 60 plus different gas carriers, and a 100-year operating record. So credibility, knowledge, bankability. So their ability to operate, finance, and commercially contract the vessels longer term, brings credibility to the solution. So they operate in the Nordic region. They have gas transport relationships with the German utilities that we're working with. So there's a huge boost of our credibility in bringing this concept, as you described, into commercial reality. And compressed hydrogen fits in their ambitions to have a new fleet of ammonia carriers, CO2, LH2. So that suite of transition fuels. So what are we doing with Carolan? Core is to apply our cost estimates into a reliable industry model. So we're developing a cost model for freight using their knowledge of shipping operations globally, and we're presenting that to our partners. They're also providing their operational input to the final design specification before we engage with yards. So we know that the ship is designed and approved at the moment in relation to class regulations, but from an operator's perspective, how do we refine that? So I think there's a number of things that they bring to the table which enables us to transfer into these key commercial events in the forward 12 months. So that's Carolan. If we look at the example of Jenson, well, Jenson are a successful operating company, Norwegian-based. They operate some 9 fleet of large FPSO units in South America, Asia, Africa. They're a multi-billion-dollar business. They've recently raised $1 billion of pre-IPO capital to go after growth industries, and one of those is CCS. So they have been looking at ways to scale CO2 storage and transport and storage and injection assets, and they approached us about translating our H2 design into the world of the CO2. So again, you've got a large bankable group providing us funding to develop the plan, and then they will help us joint market and implement that concept into reality of clear products, and they have ambitions to move into the full CCS supply chain. So it's important for small, Australian development companies to have, big partners who are guiding you on the way through and allowing us to step back and own and license that IP that we have.
Just as an adjunct to that, I think it's sort of the ideal that smaller Australian companies do like to have large partners, but part of the issue within an Australian context, I guess, has been that comes at the behest of being only able to move at the pace the partner wants to. Yep. And it feels to me as if you've got a very, very strong alignment, both on what you want to see the end result, but also on the timeline to get there.
Yeah, so in the case of hydrogen, we've been pioneering this for some 3 years. So we've developed opportunities, we've developed the IP and the design ourselves, the classification, and then we brought in a partner late in the piece. So we really had to substantiate and qualify our position. So I think bringing someone on, such as Carolan, demonstrates that we are advanced and mature. We do have a key advantage in our offering. Jenson, again, as you point out, a large organization, but they are incentivized to get on and deliver solutions. They've invested heavily in a CCS injection project in Norway. They're looking for solutions. CO2 is essentially a garbage collection business, so they understand you need to be at the lowest cost, and I think our solutions are helping them get there.
Just moving on, I guess one of the things we often see in an Australian context is at the smaller end is financing. Mm-hmm. And in looking at the Provaris business model, I think the innovative aspect that sort of sits there at the moment from that financing perspective is your capital light model. And could you outline, I guess, the quick mechanics of it, but I think the important thing is also how it gives you at least access to early cash flows through that post FID to production through that construction process.
Yeah, so the capital light model was something that we've only really clarified in March this year. So prior to 2024, we had ambitions to do parts of the upstream production, shipping, and it wasn't very clear. So we've made it very clear that we're following an industry model that's been established by other storage and shipping technology providers, that you can own the IP and license that to owners and operators. So in the case of our H2Neo design, we own 100% of that, and we're looking to follow a successful model which has been put in place by a company called GTT in France, where that provider supports up to 80% of the world's LNG market. So we're not trying to establish anything that's new or novel from a commercial perspective. We're trying to replicate what's acceptable in the industry. So in that instance where we see ships go to investment decisions and they go into construction, we will then be paid a license fee surrounding the capital value of those ships. So that's license fees during construction, which is typically 30 months. And then we're looking for a level of carried interest in those vessels, which has a share of the forward cash flows over the next 10 to 15 years. So if we can remove capital from our requirement to get to commercial outcomes, earn what are material license fees through construction, and then have an annuity style revenue element to our carried interest in those ships because of the uniqueness of our design. So that is probably key for, again, small development companies to show the pathway. Similarly, we will look to implement something similar in the CO2 space. So importantly, for our CO2 program, we've had Yinson funding us to date. So they've spent some $500,000 US, and we're about to announce the next stages of that development, which has clear joint ownership and financing support. So I think we're finally through the hump of being a development R&D company. We're now looking forward towards unlocking those commercial events. And I think that the revenue model that you've outlined and what we put in our own disclosure should be quite simple and clear for investors to have a sense of where the value can drive.
I guess the macro and the pieces you're putting together all look, very good and very, very well advanced. I guess from an investor's perspective, it's more now about what can we see, what visibility are we going to get on that progress over the next 12 to 18 months. And I'm wondering if you could sort of outline the key event drivers within that perspective, and whether there might be anything in there that is a bit further back in your portfolio that might actually surprise on the upside.
Yeah. So we've got clear steps to finalize our final steps of approvals and class design, and that's going to be re-established with our prototype program in Norway after the summer break that they have, and so that will run to the end of the year, and testing will take place. That then unlocks all of the approvals required. So significantly advanced development feed approval, design approval, just that final step. So together with that, that's unlocking the discussions that we're having with Carolan and future ship owners, and yards. So that runs in parallel. The projects themselves, we've established a couple where they're moving from term sheet towards some binding level events for offtake. So that would then show the path towards investment decisions where ships would then be deployed and required. I think the surprise is that we continue to see inbound inquiries from both offtake and supply parties in Europe. So the advancement of our acceptance of our approach, the credibility that Carolan provides, and the bankability of that shipping solution, we would hope to bring through other opportunities that are more transparent and clear in our portfolio. So adding additional, ships to the fleet. And then on the CO2 side, we've got a design level report that's now been accepted. We're seeing the next step there to be a level of preliminary class approval. and then we'll announce the feed level program that will take place in the next 2 quarters. And so I think while Yinson have a view on where that first tank design will go into storage and injection, we are already looking at other opportunities, be that barge storage, floating storage, and even new ship designs specific for CO2. So I think there's a number of products available to that one tank design that we have established, which can broaden the portfolio, and I think that is to surprise on the upside.
I look forward to that sort of rollout of news and those ticks in boxes, which basically can move what is proof of concept into almost, and it's a bit of a throwaway line, into a probability play. And It's almost, well, I can now start to see it. I can crystallise around where I think the cash flows are coming, and particularly with your inbound interest about where that growth opportunity is just beginning to become a bit more defined. So I think the next 12 months is going to be extremely exciting to have a look at from our perspective, and hopefully from yours as well.
Yes, that's right, Andrew. Yeah, we're confident about our approach. We're in the right position. We're operating in the right environment, and the next steps look exciting.
Thank you, Martin and Andy, for discussing Provaris Energy's strategy today.